Chris, welcome to Plume Talks, a podcast focused on RWAs, RWA and really explaining about how we're taking things and where we're putting them on chain and explaining what this means to people, and just talking about what we're doing here, talking to different builders and investors and operators in the area to kind of get a feel of what's happening. We think it's a big category that's really spending and taking a lot of shape now, and so just trying to get a better sense of people who are behind the scenes. And so, for those who don't know, Chris is a partner at Haun Ventures, and I'd love to give a background in a second. But Chris was, our lead investor in the seed round, also a big part of Series A as well. And so, has been a longtime friend through before this as well, but also helping us build and shape Plume. But maybe Chris, real quick, would love to hear about your background, how you got here, and just not only to venture, but to crypto, and then also thinking about the real world. And I think you've got an interesting view on, having done real things before, unlike a lot of people in crypto, how that shaped how you think about investing and how you think about this category and this space and all that.
Yeah, well, thank you for having me. Exciting to see Plume where it's at. I think it's come a long way since at least we've worked together. So a little bit about my background. So I started my career at Morgan Stanley in New York. My background generally is a bit of a mix between finance and tech. So I was doing investment banking, really had my financial training wheels on there. They didn't give me much responsibility, but I was learning the ropes and doing meetings, learning how to think about companies. And then about 10 years ago, or over 10 years ago now, I moved out here to the Bay Area. I joined a private equity firm called Hellman & Friedman. We invested in a lot of software companies. And actually through that, in potentially one of the unlikeliest of paths, I discovered open source for the first time. So we were doing diligence on a potential software company that we might invest in. And then one of the things that we were most scared of was actually this open source project that was run by a couple people around the internet. And we invited the creator of that project to come and explain to us what that project was. And this guy shows up in jeans and a t-shirt. And we were looking at a company that was billions of dollars, a public company with thousands of employees. And it got me thinking, if this is what we are most concerned about for this potential investment that we're making, there's really something to this open source idea and how disruptive it can be to software. And so that thought never left. And I ended up leaving H&F and I joined GitHub. I was at GitHub for about 3 years, helped to build out a bunch of the business functions there. And then I led the acquisition with Microsoft in 2018. And GitHub was a very special place. It was obviously the home of open source. It was a pioneer in a lot of areas. So it was an 80% remote company. And the company was founded a long time ago. And so when COVID hit, I had a lot of people ask, how do we do this remote work thing? And so even in unlikely ways, GitHub was this really frontier area. And actually GitHub was also where I first came across crypto for the first time, because the engineers there kept their eye on some of the most interesting open source projects. And one of them was Ethereum. And so in 2016, they were telling me about this open source project. And I just thought, it's interesting, but I don't know really what to make of it. But it's an interesting place to hold some alternative assets. And so I figured, if you keep some percentage of your net worth in there, worst case, it goes to zero. It's a really bad day, but your life's not over.
Right.
And in the upside case, you get really asymmetric returns into this thing that could actually power the global financial system or really be a world computer. And so that's when I first started getting exposure to it. But in the back of my mind, I always just thought about it.
Did you buy a bag at that point?
I did.
Good.
And I still have it. And I always,
good.
Crypto is one of these things where, it's like wine. It just gets better with time.
Hell yeah. Good.
But I always thought about it as an alternative asset, and I never thought about it as a career, really. And so after GitHub was sold to Microsoft, I ended up joining Index Ventures. I was there for about 3.5 years. And then crypto came up again. I started noticing it during DeFi summer. And one of the things that I really paid attention to a lot at Index was where were the most interesting communities popping up around the world. In the beginning, it was things like productivity tools. So places like Figma or Notion were great places where really great communities were gathering around these tools. Maybe in gaming. So we worked with a company called Rec Room, which was really fundamentally about building communities. They were originally started in VR, but they're now
VR thing, right?
Yeah, but now actually they're multi-platform, and so you
cool.
can find them on even iPhone and iPad. So I was always focused on communities, and then during DeFi summer, I came across Uniswap and Compound, and to me, those communities were absolutely insane. They were super engaged. The scale was not something that I had really come across during my time in venture. And then the last thing, and this comes back to my background from GitHub, I started to see this as the natural evolution of where maybe open source projects could go, where you natively have an open source native network instead of just a project. So rather than having a static library of open source code, maybe now you actually have an open source native business that runs in the wild. And that was a really compelling idea to me. And so I started going deeper and deeper and deeper down the rabbit hole. And then finally, just about 3 years ago, I was so deep into crypto and that's all I was thinking about. And I ended up deciding that I want to be surrounded by people that were also thinking about this 24/7 in the way that I was. And that was the catalyst for me to join Haun Ventures.
Nice.
So that's my long history.
Very
and
cool. I love it.
yeah, and
Nice.
so you get a little bit of a piece of open source, finance, tech, just generally, and then all that kind of coalesces together into crypto.
Totally. I think look, we've known each other for a while from Index. I was at Scale before too.
Yeah.
And I think the thing that I find interesting about what your background is into this is, a lot of us got into it. Not I don't know about a lot. Maybe I'm speaking for myself. A lot of us got into it for price.
Yeah.
Right at the time, which is like, look, there's a way to make money, and especially around DeFi summer, you had yield farming, you had ohm forks, you had all the nonsense of that time, which is a great time. But it was like fundamentally a lot of nonsense, right? And I think what's interesting about you is coming at it from sort of an investor seeing open source and then threading that needle between what you're seeing within Adventure at the time, which is all these productivity software and communities, and Uniswap and Compound, and having this through line of like, this is kind of where things go and where development comes into play. I think it just gives a different view, a different lens than like a lot of us, which is probably like informs how you do things and how you look at spaces today, and and we'll talk about it a bit, but like how you operate and like work with companies too, right? Whereas a lot of times it's very mercenary, very token driven, very price driven. I feel like at least our interactions, it's very much like much more about the fundamentals. How do we build something that lasts, and how do we focus on what actually matters here? So just it's interesting to hear your background, and we can get to that in a second. But maybe zooming out, like just talking about, maybe how you guys, how we started working together, and then also the view and building up towards it, because we spent a bunch of time together before.
Yeah, we did.
We've known each other for a while, and then we got reintroduced through one of our friends. It was, it was a couple months. We're just kind of talking back and forth and looking at customers, and I think at the time, to be honest, right, if we fast forward to today, I think RWA conversations everywhere. We hear a lot about things from Larry Fink talking about RWAs. All the big TradFi folks, Trump and a bunch of them are doing stuff on RWAs. And it's become really like the topic du jour. It's not quite like the number one thing, but it's certainly a key fixation point today. But I didn't feel like that was that at the time. And so maybe talk a bit about that, just kind of getting to there, because I think now people look at it, but people forget like a year ago nobody cared. And it was like not a thing at all. So yeah, maybe talk a bit about that and just like how you kind of got comfortable with this stuff.
Yeah, for sure. So I mean, obviously you and I have known each other, and so that helps. I know that you're a real person and that you want to build real things, and that was awesome. But just speaking to the market and the product and the potential opportunity at hand, it was not obvious at the time. So rewind a year ago, when we hear the word RWA, I think we hear trad, we hear boring, we hear honestly not a lot of movement or excitement. Totally. And that's a very different narrative, that's a very different type of excitement than the one we have today. The thing that got me excited about RWAs actually is the idea of giving esoteric assets a global internet market. And that's also somewhat inspired by what I experienced from Index. And at Index, there are some really great consumer investments there. And Index invested heavily into authentic communities, and this idea that an internet native market is actually sneaky large. So you could look online at the number of subreddits with 100,000 members. There's a lot of them.
Totally.
You could even take things like sneakers, and you could have said, if we rewind like 20 years ago, and before you had real internet native scale, if you were to go around your local town or something and ask like, who here is interested in collecting sneakers, you would have gotten a few people, but it doesn't feel like a large market.
Right.
But actually, when you take a very niche interest and then you expose it to the global internet, you can get millions of people involved into something that feels very, very niche. And so I thought we could apply that idea into crypto, where crypto is a globally internet native market. And so could we take esoteric assets that maybe Wall Street ignores because they say it's too small for our scale and it's not mainstream enough, but actually there might be somebody across the globe for whom that is a perfect fit for their portfolio, actually. So maybe actually I live in Japan and I want some US stock exposure, and that's something that we take for granted, but somebody overseas, that's actually not an easy thing to do. And so this idea that assets can be worth different things to different people depending on what your circumstances or where you live. And then if you give it this global internet market, that you could find a buyer for even something that feels like an esoteric market.
Totally.
That's what really captured my attention. I don't think we're quite there yet, to be honest. I think actually what we have seen in terms of RWAs is the things that are most popular are the things that are the simplest,
Yep.
right? So US Treasuries, maybe private credit is there, but something that's simple to understand. But I'm still fascinated with this idea that you can give esoteric assets more global access. And maybe it's not directly somebody, like literally a person or retail, buying that esoteric asset. And maybe it's going to get bundled in.
Yep.
But this idea that you can have all of these different assets that represent a different mix of exposures, and depending on what you're looking for, that you can really dial that in to the exact thing that you need, I think is something that's really fascinating to me. And that's what got me really excited about Plume. It was the first project that I had heard where you're really thinking about RWAs, not just from, well, let's just go tokenize more stocks and bonds, but it's actually, let's bring net new assets on chain. And that was really interesting. So that's like the real world view. The crypto view is, crypto is highly correlated with each other. So
100%.
assets tend to go up and down together, very highly correlated.
Everything is Bitcoin beta, basically. Right?
in some shape or form. And it's not 100% correlation, but generally, Bitcoin is correlated to some form of tech, and then crypto is correlated to some form of Bitcoin. And with RWAs, I think for the first time you get uncorrelated assets on chain. And so also this idea that you can start to construct a portfolio of diverse assets, to me felt like finally we could start to create some real portfolios that are not going to be 100% correlated with each other.
Yep. Yeah, totally. No, I think just like you said, I remember we talked about it before. One of the things that I was really excited about, like you said, I don't think it's totally come into play yet, to be honest. Now, we have a lot of these protocols building on Flume today still, but at the time it was things like, again, taking each subreddit and making it a thing, right? Like, you and I know this, but like a lot of people don't know, like GOAT as a sneaker marketplace.
Right.
It's huge. It's like a huge business, right? And it turns out that, like you said, it's how people get introduced to a lot of sort of financial concepts, right? Like what's a good asset? How do you buy and how do you trade things? And just like getting into this idea, because sneakers are an accessible thing. They understand it. There's cultural value and sort of, it's just tied to a lot of things. Or Pokemon cards, right?
Yeah.
There's a company called Whatnot, right, in LA that does a huge amount of GMV, and it's just trading sports cards or Pokemon cards all day, right? And it's the exact same idea, right? That has a little bit more of a sort of like a gambly feel to it, but still, it's the same thing, right? There's value in either sneakers or cardboard cards, right? And it allows people to get exposure to a sort of financial world, and two, it actually has real value. And so, like you said, by bundling this stuff together and allowing it to spread, there's actually a lot of value there, right? And these markets are actually just like very big. People just don't realize that these are multi-billion-dollar markets, and that's in its inefficient state today, where you have to like send stuff around, and it takes a long time. And if you can actually move these things quickly, right? Like people always forget when we're buying equities from Robinhood back in the day, or before Robinhood, when you bought equities, you would physically mail out the stock certificate to somebody, right? And like that's kind of what this stuff is today, right? Like you're taking a sneaker or you're taking a Pokemon card and you go through this thing as you want to buy and redeem, you have to send it to somebody across the world. And it's the exact same process. It's ridiculous. You have to worry about fraud, you got to worry about verification, all kinds of stuff, worry receiving it, versus now when I buy equities on Robinhood, it's just swipe of a button, right? Behind the scenes, there's like 7 layers of custodians. All it's updating is a line of the database for who owns the stock, but there's nothing actually being sent around, right? And so the same thing is going to happen to all of these assets, right? Where they're now completely liquid, you can move them around instantly, you can combine them and do all kinds of nonsense with them, which make them really powerful without having to do all this. And so the rate of turning for each of these is just like exponentiates a lot.
Totally.
And then it gets really fun and exciting because now these things can move. And like you said, there's a and they can, like you said, be combined. They can be recreated and molded in different ways and actually become a useful thing versus just like it's just cards, right?
Yes.
So yeah, I think I totally agree with you. And I think, like you said, the thing we have seen work well on the other side, right? I think we both started there, and we see like there's been a lot of pull towards the simple stuff, which is treasuries, right? And like you said, it's the idea that we're doing something that's like crypto's always been about wealth creation, right?
Yeah.
Let's make a bunch of money here and all this, right? But there hasn't been a good way to protect money, right? Or conserve it or save it, right? Or find other ways outside of the original RWA, the stablecoin, right? I know you guys have written a bunch about it, and actually,
Yeah.
you guys invested in Bridge, was a great success, right? And I know you guys have done a lot and like looked a lot into stablecoins and cross-border stuff, and maybe talk a bit about that. Like, I've always thought the stablecoin, we talked about this a bunch, is the original RWA and sort of the one to learn from in how they grew, which is a very crypto native first experience, and then from there all these emerging use cases that now really become a great bridge for onboarding new users and new things like that. But you guys have direct experience. I mean,
Yeah,
curious to
for
hear
sure.
about like the bridge and just stable, how you guys developed
Yeah.
this thinking overall.
Yeah, for sure. I mean, we're very deep into stablecoins. We've invested in it very early on. Obviously, Bridge. I actually, partnered with them when I was at Index as well, so a long time ago. We're now investing in BVNK, and there's others that we haven't announced yet. So we're very deep in that space. There's a lot of things that we can learn from stables. So I think first, let's cover the use cases. So the original use cases for stables was crypto trading, right?
Yep.
So you needed a stable pair to be able to trade against Bitcoin. You needed a stable pair to trade against Ethereum. And so that was the original use case for stablecoins, rather than actually having an exchange hold fiat dollars and trading against it. Something like Uniswap, for example. You're going to trade ETH to USDC or USDT or something.
Yep.
The second use case is cross-border payments. So there's a whole variety of these, but just the idea that wires take, it's $40. It could take anywhere from 1 to 3 to 5 business days, depending on where you're trying to send it and the different legs that are involved. And one way to think about this and why that exists versus the crypto system that we have is that every country has their own financial system. And so sending money internationally is you trying to connect to some permutation of 150 financial systems around the world.
Yep.
Versus crypto is literally the inverse. It's one global financial system and every country trying to connect into it. And so it's natively interoperable from day one. It's supposed to be global from day one. So we're starting to see a lot of volume pick up. They can be treasury management use cases. So it's a global company that makes, like an often cited one is Starlink. And
Yep.
they'll make money in some country where they don't want the currency necessarily, but they generate revenue from it.
Right.
And they want to repatriate that currency into US dollars so they can reinvest it back into their business.
Yep.
Or there's a lot of gig economy companies where maybe actually now you've got workers in the Philippines that are helping you do certain tasks, and I need to send literally a couple cents to a couple dollars to each of these workers every single week, and I need to do thousands of these payments, and we're just breaking the financial rails. They weren't really built for these use cases. And these are really, they're internet native, they're global first use cases, and that's where we've seen a lot of activity for stablecoins. The third one I think is really interesting, which is, it's actually not about crypto, it's really more about the US dollar, which is a lot of countries around the world have volatile or unstable currencies. They're getting devalued very, very quickly.
Yep.
Maybe you don't have a lot of confidence in that country's monetary system. And so one way is you could invest in Bitcoin, but of course you could also try to buy more dollars.
Yep.
And people do buy dollars for that use case. And the best way to buy dollars right now, or I should say the easiest way to buy dollars right now, is to buy a stablecoin. So we've seen that emerge as a third use case also. I think that's really interesting for tokenized assets because the US dollar also depreciates. And so it might depreciate less than your current local currency, but it also depreciates. And so at the very least, what you should do is buy a treasury. You already have a form of an on-chain tokenized dollar that could easily be exchanged with an on-chain treasury. And at the very least, you're protecting yourself from some inflation risk. And then from there, once you have experience actually buying something on chain, maybe you start to explore and go up the risk curve a little bit. Maybe you're interested in buying some US equities, or maybe you want to put some private credit, or there are other assets that are more crypto native as well that you can ladder up the risk curve to. But to me, I'm watching that one really closely because we already have a core set of users that are starting to buy on-chain dollars. And I want to know how can we get them to engage and buy more things that are also going to be beneficial to them, right? Like we're not selling them stuff that's negative EV. Like, you should definitely buy a treasury.
Totally.
If you have
100%.
faith in the dollar, you should have faith in the treasury.
Totally. Like instead of sitting there and losing money at the rate of 200% a year with your peso, right? Holding the US dollar is an insane product, right? Like it's just so great to not have to lose money on a regular basis, and then to complement that with earning money, right, through the US Treasury, right, is just a next level product for a lot of these folks. And so yeah, I'm mega bullish on that too. I always think that there was a quote, I forget where I heard it, but the quote was something like, "There's more $100 bills in like mattresses or pillowcases outside of the U.S. than there are $1 bills in circulation," which is like holding a physical $100 bill is the way to is the way to like hold value across the world, right? And that's just clearly a silly way to do it.
Yeah.
And like clearly the stable coin is like a much more straightforward way. It's so much better. It's usable. It's a cross border. You hold it with you. Like it's just there's a lot of like. It's just such. I think it's one of crypto's great products.
Yes.
In totality, right? Forgetting RWAs, like it is clearly the one thing that everyone gets like right away, and it is to me the great, the best product for onboarding. Right? Meme coins do have its own world and its own path, but the RWA, the stablecoin is by far the best product to actually bring new people in, and there's just such a plurality of use cases we haven't even begun to really tap into.
Yeah.
And it's funny because a couple years ago, I feel like I don't know, you guys know this, but I feel like a few years ago the stablecoin was not in vogue, or like as a business, it was sort of like considered a very capital intensive, inefficient, highly regulated, painful, like all these bad things, and it was sort of like, look, Tether's won, and like God bless Jeremy's doing it, and someone's doing the American version, but like I don't want to do this.
Yeah.
And DeFi's the answer. I can flip my money much faster that way. And now it's like it's all the rage. Everyone's doing stable coins, and everyone's trying to do all kinds of different things.
Yeah.
Crazy how that turns. I mean, you guys were doing this much before, but like I guess curious like just how you've seen it shift and like
there's a real why now moment for stable coins. Payments was the original use case for crypto. So if you talk to mainstream audiences, they're like, well, why is it different this time? And there's a real answer for that. If you rewind 5 years ago, it was really hard to create a wallet, which you could think of as just an account, right? So if I want to create a wallet, I get, I have to go through like 10 steps. I get a bunch of scary warning signs that says, if you lose this piece of paper, you're never getting your money back. And I'm like, well, I have a bank account, so I'm just going to go use my bank account. Like this sounds like really painful, and it actually doesn't even sound like a better product. So why would I use this? Right. And it was really painful. Today, it could be as simple as just using your, Google one-click sign-in, and it will create a wallet for you. Of course, if you want to go through the other steps, you can do that too. It just depends on how much trust assumptions do you want to bake in and which providers do you want to use. But the reality is now we have an option, which is a very easy option to create a wallet. And for the majority of people, that is a very attractive option. So that exists now. You can create a wallet. You can create an account. It takes a couple of clicks. You don't really need to think about it. It's not that scary. The second thing is just rewind back to 2021 when we were at the peak of NFTs and the last bull run. It was not uncommon to see transaction fees or gas costs that were going to be like $100 to $150 to do anything.
$200-$300 for gas fees was
totally
a normal thing.
So an international wire costs $40, and so it's not practical to think about an actual payments use case when gas costs could spike to $100, $200 per transaction. And today, if you can use obviously alternative L1s, you can use L2s, you can use a whole bunch of different things, and now you can send a transaction for maybe fractions of a cent, couple cents. You can get confirmations maybe in the hundreds of milliseconds to maybe a couple of seconds max. That's a significantly improved experience, and you can actually now use this as a person.
Totally.
And so I think there's a lot of enabling technologies that we've worked on as an industry for the last couple of years. It's made meaningful improvements.
Totally.
And so before, if you were to ask, like, how do we bridge this gap between people that use crypto, people that don't use crypto? How do we do this for payments, for tokenized assets? A couple of years ago, I would have said it's a tech problem. Today, I don't actually think it's a tech problem. I think it's a go-to-market and a product problem. We need to provide enough value. We need to make sure we educate people in the right ways. We need to be able to reach the right audiences. Like that's a much more business problem than really like a fundamental tech problem that we had a couple years ago.
Totally. I think people forget how insane it was back then to use crypto.
It was bad.
Yeah, it
It
was
was just
very
straight up
bad
bad.
because we were just doing things like ETH mainnet. There was nothing else.
Totally.
ARB had barely come out, and Sol was kind of out, but it's not the thing it is today.
Right.
And even like Phantom's great, and like we didn't use we had MetaMask, and like it's fine, but it was just hard to use, expensive. We're trading monkey JPEGs for hundreds of thousands of dollars. It's just like a whole thing. And now, like you said, I don't even think about it anymore.
Right.
Like it's like the experience is actually like pretty solid now.
Yeah.
Like I don't even know to think about it. It's a wallet. I send transactions. Even for us, we run a ton of most of our business on stablecoins, right?
Yeah.
Like we send them all over to our contracts all over the world. Our vendors take stables, right? Internationally, it's the fastest thing, it's the easiest thing. You send an Etherscan hash, they got it, and like it's done.
Yeah.
It's very, very simple.
That last point actually is really important because also people started accepting it culturally as money.
Yep, 100%.
And that's a really important mental mind shift.
Yep.
And we didn't have that a couple years ago.
Yeah, 100%. I think that's right. It was still a question of like, is this going to be here, right?
Right.
Whereas today, it's like, look, the stable to me, even the USDT is as good as the dollar. Like I'm fine with it, even if we don't know it's entirely.
Some people will disagree.
Some
but
people, for me, it's fine. For a lot of the Asians, it's fine.
Yeah,
I find that folks in the East like don't care, and they actually prefer that over to USDC. So yeah, no, I totally agree. It's crazy how this happens. But maybe okay. So look, I think that the stable's the original like RWA, right? And as we think about where this goes, where do you think we go forward from here? And like, taking into account again, like I think people don't really understand RWAs, right? People think RWAs are trad. It's like sort of very KYC'd, very like financial stuff that doesn't relate to me. But where do you think it goes? We have RWAs today, we have treasuries today, which the treasury today is a great product.
Sure.
The truth is, it still doesn't touch most people. If you go to any room and ask who here is buying Biddle or who's buying Ondo, 99% of people have no idea. Like they just sort of, yeah, I get what it is, but I don't really use these things. Where are we in this, and where do you think it's going?
A couple of stats that might be helpful. So I think right now we've got about $18 billion of tokenized assets in the world.
That's right.
That's excluding stables. A lot of that is private credit, it's treasuries. I think part of that is because those assets are quite scalable.
Yep.
So there's a lot of supply of them, so you can just immediately put it on chain. And secondly, they're very simple to understand. And so it's naturally the first things to come on chain and for people to start to understand and start to buy.
Yep.
But we've got about $18 billion of tokenized assets. The total crypto market cap is about 3 trillion.
Yep.
And there's no real good stats around this, but all the assets in the world is a couple hundred trillion.
Yep.
Depending on what you decide to count, it could be like 300 trillion, it could be 600 trillion, but there's a lot.
Yep.
That's across real estate, commodities, alternative assets, obviously stocks and bonds. And RWAs today is not even a little point in that pond.
Right.
It's tiny. And so I think there's a lot of room to run. I think the key thing that we're looking out for is what are the assets that are going to be attractive to whom?
Yep.
Because the really attractive thing about crypto rails in general is that you can give access to assets that previously some people would not have access to at all, right? Like it's similar to the idea of people in hyperinflation countries now getting access to the dollar, and they didn't have that before.
Yep.
Crypto rails was what was required in order for them to gain access. And now when you think about, okay, I live in a low inflation world in Japan, and we have very little growth, and I want to be able to buy assets that are higher growth, higher risk.
Yep.
Maybe I want some crypto exposure that's going to help satisfy some of that. But also maybe actually I want to be able to compose that with other things that have different types of correlations so that I can hedge out some risk.
Yep.
Somebody in Korea, even though geographically they're very close, it's going to have a very different dynamic, right? Their economy looks very, very different. Somebody in Singapore is going to want something totally different than that. And so when you extrapolate this, you're basically, the thing that we get excited about is rather than having all these siloed systems around the globe, you can have one unified place where you can start to really compose and dial in the exact type of exposure that you want. It's all composable, it's really fast, and it's really cheap. And I think those are the things that we get really excited about. We're really not even in the first inning, like we're kind of warming up still.
Totally.
And that type of potential, even if we were to onboard 1% of all the other assets out there in the world, that's a couple $1 trillion. And that's really exciting.
Yeah, interesting. Okay, I think that all makes sense. Like you said, I think the exciting thing that I care about, and I think everyone cares, if we zoom out a million miles, right, it's easy to get caught up in the rat race of today of like, this token is asset, this thing. Like at the end of the day, it's all nonsense. The only thing that does matter is this. 18 billion of assets today in tokenized assets on chain. 3 trillion in crypto and like 1,000 trillion off chain today. And so we're not only just a tiny part of crypto. Crypto is a tiny part of this. So like we're multiple levels beyond. So as long as we can keep just marching one foot in front of the other, right? We should be good. And everyone always says like, there's always funny things like everyone thinks everything goes to one. We have $3 trillion of assets today, right? Of which most is Bitcoin. So it's actually about like let's call it 1.5. Like maybe one. And we already have a bunch of chains, a bunch of products, a bunch of ecos, like a bunch of different things happening in that tiny little world. So when this whole thing comes on chain, right? We're going to have way more nonsense going on and like so many things. And so I guess it's one of those things. To me, the exciting thing is it's one of the few positive sum games in crypto right now where as this comes in, if we do it right, everybody should win, right? Maybe to different degrees and maybe different magnitudes, but like everybody should win. It should be a positive thing for everybody, whether you're doing RWAs or not, right? Because it's going to bring net new people, net new dollars, net new use cases. Like that's why I think it gets me excited about this. I think it's just like one of those areas where, again, like we're really trying to just overall if we do it right, it's a win-win for everybody. Even for the user, for the assets, right? For the protocols, for people on chain, like the whole thing should become better if we do this right. So anyway. I think it's, obviously like we're bullish on it and we think there's a ton to go. I think there's just a lot more education to be done about what this is and the best ways to show. So with Plume mainnet coming out soon, we'll talk about it and like people can be able to click around and see these things and interact with them because I think turning the real world into tokens, right? The beautiful thing about a token is it's such a great experience. Like you understand exactly what it is. You click it, you own it, you can swap in and out, you do whatever you want with it and you can feel it. And so by turning the real world into that experience, I think it just creates a lot of power and a lot of leverage, and people all over the world get access to things very quickly. And so we'll see where it goes. But maybe look, I know we're coming up on time here, so maybe shift to like rapid fire stuff really quickly. Meme coins, good or bad?
I don't like them personally. I just see it as a form of entertainment. Right. And so if you want to be entertained, you want some thrill, go for it. But know that it is definitely a losing game for most.
Yes. For sure. But like lottery,
Yeah,
it's some people like gambling, so I get it. 3 most like undervalued sectors, I guess, or maybe tokens. That are like
in crypto.
Yes, that people just are not paying enough attention to. Maybe like the stable many years ago, or like RWAs like a while ago.
Like
where do you think that people are not paying enough attention to?
I still think people are not paying enough attention to RWAs. It's something that we're very bullish on, obviously. I don't think people are paying enough attention to the FX part of stablecoins.
Yep.
I think people think we have the stablecoin now, let's just send $1 trillion through it and it'll work. A lot of things will break. So instead of actually building more of the same in stablecoins, I think we're underappreciating all the things that we're actually going to break when we actually scale this thing to lots of different payments that are going to go through it. And then the last thing I would say is I think people still underappreciate the power of lending markets that we have in DeFi. It doesn't break. Yeah. It just doesn't break. As long as, obviously, knock on wood, nothing gets exploited. Where's wood? I don't know.
Cooked.
Yeah, I'll knock on it later. But yeah, I think the core mechanism is very powerful. I think the more assets that we have on chain where we can actually use it to compose these markets, it's only going to get better.
Yep.
And I think we understand now fundamentally just how robust these mechanisms can be, and I think it's very underappreciated.
Yep, for sure. Are we going to get another FTX this cycle? Or as everything comes in and we stabilize, do we go the right way?
I really need more wood here. I think there's, as with any early technology, there is going to be good use cases. There are going to be use cases that are going to be not as good. And I have to believe that there are others that are out there still that,
for sure,
yeah, are shoes that could drop. Look, I'm not hoping for it, and I really hope that it doesn't come to fruition. But I think one of the bright lines around all this stuff is that actually we might be getting some more regulatory clarity. It's something that we've all been looking for many years. And, recently the SEC came out and they actually defined what a meme coin was. And they were like, this looks like a collectible and it's not a security. And that type of clarity is super helpful. Because a builder can actually know, well, if I'm building a meme coin platform now, then, I know it's not a security. Like I can think about all these different things that I could do now because I know that these laws don't apply to me. Vice versa, the user also knows. It's like, look, it's not a security. So these things are just driven by market prices. It's just pure, buy and demand, sorry, pure buy and sell, just pure market demand and market supply. So, entertain yourself if you want, but now there's actual clarity around it. So I think the regulatory clarity stuff will really help.
And that's how that works. When you have permissionless markets, right, then people can build and do whatever, like shit happens.
Yeah.
What's your most controversial take in crypto?
In crypto,
Yeah,
I think simpler is better.
simpler is better.
And I think we see a lot of people that take inspiration from the simple stuff that's been built and build a lot of complexity on top of it. Going back to lending markets, for example, like, Aave works great, Compound works great. Simple markets tend to work really well because people can actually understand what it is. When you mix financial assets and financial markets with lots of complexity, then we tend to not be able to predict what could actually go wrong. And when you're playing with large sums of value, that could be dangerous. And so my most controversial take is I think people are always looking for some really intricate mechanism design or some really intricate kind of clever ways to do DeFi, something like that. But for me, always simpler is better. And if I can't understand it, then chances are the vast majority of people can't.
Yep.
Because not because I'm smart or anything, it's because that's my job, is to try to understand these things. And if I can't explain it simply, then most people won't be able to understand it. And I think that's dangerous.
Yep. Makes sense. And I don't know if you can say this. BTC target for this cycle.
Can't give financial advice. You're going to get me in so much trouble.
Oh, God. Okay. And maybe last thing. AI. DAI, all these things, DeFi or whatever people call it. I feel like it's a polarizing topic. Do you think it's a scam or is it a real thing?
Depends on, I think, the timeline that you're looking at. I think over the long-term horizon, I think AI is going to be prolific on chain. There's going to be a lot of bots, a lot of things running around. We already had them, right? We had Telegram bots that were trading on behalf of people. We already know that this behavior is something that people would actually sign up for. We know that these things can actually work. In the short term, I think it's not quite the experience or quite the level of sophistication that people are looking for. So in the short term, I'd say not as bullish. Longer term, I'd say it's going to be prolific.
Yep. And then maybe last thing, centralized exchanges or DEXs, where is it going? Are we going more to hyperliquid or is it, are we still staying in Binance's hands?
It's a good question. I think liquidity network effects are really hard to overtake. So maybe that's an unfortunate answer, but I think that's the reality.
Yep.
But I do think actually one thing that's interesting to me is the more actual financial activity happens on chain, the better positioned DEXs will be.
Yep.
Right now, the main activity in crypto is to trade. And if it's just trading, then centralized exchanges are going to be better for that.
100%, you're right.
But if we actually end up having more robust financial markets that actually live on chain, then you might not actually want to, take your assets and move them to an exchange just to be able to exchange some assets and then bring them back. So doing things natively on chain might actually be more interesting in the medium to long term.
Last thing, maybe just as we close, just to give you a minute to show yourself or Haun or where people can find you on the internet, all those kinds of things.
Website is haun.co. We're a startup. We're quite literally a startup fund. We're 3 years old, so we're as much of a startup as many of the startup projects that we work with. That mentality permeates through the whole fund, and we're scrappy, we're resourceful, we make things happen. Come find us at haun.co.
Awesome. Well, thanks again for stopping by and sharing your thoughts on all this. I think it's been great to talk about a bunch of things outside of RWAs too, but of course a lot to come. And again, for what it's worth, you guys have been great partners to us, and we appreciate everything so far. So anyway, thanks again for stopping by, and we'll catch you around.
Sounds good. Thanks for having me.